This is our Forex blog for August 27th, 2013, and I like to show what I consider our absolute easiest way of trading, and that's using our currency indexes. This is the dollar index, euro index, pound index, and yen index. We also have them for the Swiss, CAD, Australian, and New Zealand, but I like to show the top four. And very easily, at a glance, you can see a wealth of information about each individual currency, and then you just want to buy a currency that's trending up or likely to trend up versus one that's weak or likely to become weak. You can see when, for instance, the dollar comes up to upper containment bands, which typically causes reversals. Look at how the euro hit this. This one hit it and bounced. This one hit it and kind of bounced. This one hit the lower 2.0 level and bounced. Every once in a while, a currency like the yen is so strong, which you can also see in our trend intensity indicator, that it goes above our upper bands and just keeps going. But most of the time when they hit the red or white bands, they will reverse. And you can also see the hourly moving average here, previous day's high, point of control, which is the market profile technology. It shows you where most traders have positions in all the yen or dollar pairs here, euro pairs, pound. So yesterday's most active price in the pound was right here. It couldn't get above it, and you can see it fell. Anytime you see a multi-hour small range rectangle breakout, tends to lead to some big moves. So because of that, you can spot very high probability trades. Also, when you spot a trend that's big, like this one, the first pullback usually, I would say 70 to 80% of the time, will try to continue down. Sometimes it moves just slightly down, sometimes it will trend down for 5 more hours. You never know. Like the yen here, broke out, went up, and then it went sideways, then it went up, pullback, went up, sideways, up, pullback, up. I mean, it went up the whole day. So you never know if it's going to continue or not. Usually our FX trend intensity will help. The daily, weekly, monthly trend underneath it will help. But there's a lot of high probability trades you can have by just looking for patterns on each individual chart. For instance, when the dollar is above the hourly moving average, the trend is up. You can see it went up and it had many hours to try to go up again, even bounced off the hourly here, and it can't. And so if the dollar breaks down right here, you want to trade it against one that's strong. Now, the yen is very strong. However, it's way above the upper containment band, so I wouldn't be selling the dollar yen with the yen so far above the band. If the yen was underneath the white band, or if it had just exploded through it and pulled back a little bit, I might consider it. But you know, it went up again, went up again. Obviously, we know in hindsight the yen kept going up, but the dollar's likely to reverse here. You can see the pound had gone down a lot below the lower band. A lot of times, currencies that are down a lot will retrace at least 38 to 50% of the direction back up, and or most of the time they also go to the hourly moving average, which is right at the 62% retracement. It's also at the previous day's low for the yen pair. So basically buying the pound yen around 830 is a pretty high probability trade. If it doesn't work, you're going to lose 5 to 7 pips. If it does work, you're probably going to make 10 to 20 pips. And you can watch each individual currency when you're in the pound dollar long. If the pound keeps going up and or the dollar falls, you're good. If the dollar goes sideways and the pound goes up, you're still going to make money. If the dollar falls and the pound goes sideways, you're still going to make money. If the dollar falls faster and the pound also falls but slower, you're still going to make money. So that's the beautiful thing about this. You can anticipate future price direction, and once you use this for a while, you'll realize it's quite easy to do if you know simple patterns like trend line breaks, double tops, double bottoms, flag patterns, the first reversal after a big move like here in the euro, very likely to continue down, and it does. But let's start by looking at the pound dollar buy around 830. Here's the pound dollar. Now remember, the pound has gone down statistically too far and it just started to reverse. The dollar had many opportunities to continue trending up and it failed. And here it is around 830. You can see it goes up. Even if you miss that first trade, you have the opportunity to buy this little flag pattern right here. And it goes from 55.10 all the way up to 55.55. So that's a 45 pip move. Shown. And you could have known about that pretty early into the move. Probably right here is when you really spotted it, right there, 49.95. So this is why our software is so powerful, and once you learn how to do this, it's quite easy to trade. I mean, if you have a loss or two, you're not worried about it. As long as the market's volatile and moving around, you're going to find a trade like this and you're going to get your losses back. I mean, 2 5-pip losses is 10 pips. So if you had lost twice before this and you got in right here, you got your loss back right here. If you held on, you got it 3 times or 4 times your loss back. So let's take a look at some other opportunities. Let's scroll back and look at this. Obviously, the euro fell a lot, rallied back up right here. It's likely to go back down. You can see the dollar's very strong, and so is the yen at that time. The dollar's at the upper 1.5 band. The yen is way above the 2.0. So if I had to take one, I would consider selling the euro dollar right here around 5, because the dollar, you know, can clearly go above the 1.5 band, and it can go above the white band too. It doesn't very often. So that is around 5.30, or a little bit after 5. And so you know about this right here, a little bit after 5. And you can see initially it doesn't really go down that much. If you got short right there and your stop above the high, it kind of went down, didn't stop you out. You could have got out of this trade with a very small loss. You look to get short again, and then that's the trade that worked. It didn't continue exploding down because, unfortunately, the dollar wasn't that strong. As you can see on the chart, if you're in that trade here and we go forward bar by bar, the dollar's kind of going sideways. Now the dollar and the euro's falling, unfortunately. It's hard to really tell on this chart, which, you know, the euros may be going down slightly more. The dollar never gets strong, whereas the yen, you know, did go up, unfortunately. If you had looked at the euro yen, I just like to play the statistics. Most of the time above the upper bands it reverses, but if you did take a trade in the euro dollar and euro yen, you can see at 5 o'clock this one went down. You know, you would have made money. Wait for a little pullback, you would have made a lot of money in that second trade. And so let's look at some of the other currencies, maybe to find some other ones that you could have traded against us. Let's see what the Swiss did. You can type in, we've built this into the software, so each of these indexes is a synthetic chart. So you can see the Swiss was very strong today, and it had a very nice pullback. This one was weak and had a nice pullback. This is ideally what I would look for. This is almost the perfect trade. When one makes a big move down, the other one makes a big move up, you get a pullback in both currencies. This one's got support right underneath it. This one's got resistance at the hourly moving average and point of control right above it. It doesn't get any better in this. So we're looking to sell the Euro Swiss around 5. And as you can see on this chart, basically we're looking for a little trend line break. And I don't let sideways moves get me into those trades, but you can see that it broke right here. It didn't really go down that much. Your stop's above the high. You know, you might have made a few pips. Short it again here. Short it again. You know, if you're a scalper, short again. And then this trade here is the one that worked, because at 8 o'clock here, if you go back and look at the charts, that's when you know, you can see the Swiss was kind of going sideways for a couple hours. It's slightly going up here, but so is the euro, unfortunately. So coming up to 8, you can see that euro is just collapsing. So that last trade that you're in that actually had the biggest move, you can see the Swiss is going up, and the euro starting at 8 went down to about 8.25, which, if you look at the chart, coincides with where it kind of bottomed out. So if you were watching both those charts and one's just slowly grinding up and the other one's falling, wait for the one that's, you know, rapidly falling to kind of subside and start to go up and get out of your trade. It's perfect timing for both entry and exit. And I find it's extremely powerful the more advanced you are as a trader. For instance, if I see a big move, I will frequently draw fibs on that move and then look to do a counter trend trade at the next fib target. So the pound made a big move down sideways, kind of slowly lower, it's likely to make a bounce at the fib targets here, and it's also more likely to do so when it's underneath the 2.0 white band. So at 8:30, I'm looking to buy the pound. I wanted to do a counter trend trade because it's down too far. The yen is up too much. The dollar doesn't really look very strong right here. You can see it had many opportunities to find support here and go higher, and it didn't. So at 8:30, the pound, I think I might have already shown this, but at 8:30, you're very likely to get a bounce in the pound dollar, even before, I think I did show this one before, at 8:45, and I showed this trade right here. You actually knew it way back here, right at 8:30. Talk about nailing the absolute low, because the pound, as a group of currencies, the pound index is likely to reverse and go up, and the dollar showed no strength. It had many hours to go up, and it didn't. It's right near its highs. It has plenty of room to fall, and when you time these, you can frequently nail the low and catch, a big 50 or 60 or 70 pip move off the lows. It's just easy to trade with. For those of you who don't want to learn how to trade, I still always recommend using our containment bands. It shows you the hourly moving average. Above it, it tends to go up. Below it tends to go down. I have some other things on this chart that I was experimenting with to improve our systems, such as a 3-line break. But you can see today was kind of tradeless. And then it made a big move down. We looked to get short. This one made a little bit of money. This one lost a little bit, and it exploded up. We bought this pullback here, which went up about 5 or 6 pips. This one, which went up about 20 pips, nailed the high right here. Fell about 15 pips. This one here failed, and this one here nailed the high. Typically, once 12 o'clock rolls on, the market's kind of dead, and you don't want to trade. But you can see even today, which didn't do quite as good as yesterday. There was a lot of decent trades. Yesterday there was this huge move here, nailed the high, nailed this. This one was a little bit early, this one failed. But these patterns are made up of over 60 different unique patterns that rarely happen. And if the market has a big move, I measure all the swing levels, as you can see. It helps you find trades. Especially when you run this on multiple currencies. You use our currency index to spot the best pairs to be in. Then if you see a signal in those pairs, let's say the euro's strong and the dollar's weak, then you want to be looking for a buy signal. And the finished version I released was just going to have buy and sell arrows here. I have the actual name of the trade. This was a search expansion number 8 trade, trend 1 trade, and a counter trend 4 trade. All 3 methods hit on that bar. You can see this one's a counter trend trade 1 and counter trend trade 5. Both of those patterns hit on that bar. And it looks for double tops, double bottoms, fib levels. This was a Fibonacci pullback area. You don't have to even understand Fibonacci in order to spot those kind of trades. It pulled back to the 38% retracement, had a multiple bar pullback. The market was still statistically strong, it was above the hourly moving average. This is the kind of stuff I've taught for years. How to trade, and the computer can actually find these Fibonacci based trades now. So obviously a big move like this, you're better off waiting for a 2-wave pullback. I've taught this, and it's in our video section. 2-wave pullbacks are over 80% winning. You can see it pulled back here, went up, pulled back. It's at the fib profit target and the Fibonacci retracement level combined. Very high probability trade. But again, the computer spotted that trade based on the Fibonacci part of it and alerted you to the buy.